Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies and Palantir Technologies. In this video, we will be analyzing a plethora of articles, to where the first one is titled, SoFi named to CNBC World's Top Fintech Companies 2023 list, which is a great news catalyst for SoFi Technologies, especially after they come off the highs of their recent earnings report, which was phenomenal. We're also going to talk about multiple analysts upgrading SoFi stock, because in the last video we talked about analysts who were downgrading SoFi shares, but in this video we're going to talk about analysts who have increased their overall SoFi stock price targets and price predictions, and how the future of this company is absolutely phenomenal. We'll also talk about Palantir Technologies regarding their upcoming earnings report. We'll also be talking about why this financial reporter downgraded Palantir shares and why we should be fearful when others are greedy, because that is half of a quote from none other than Warren Buffett, who is one of the most well-respected investors. We're also going to talk about the future trajectory of this overall company and why an analyst who bought Palantir under $10 per share has something very important to say to investors. So with that being said, I say we should buckle up for today's stories, and if you want more SoFi or Palantir content, remember to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. By now you know that SoFi Technologies is a fintech company, or a financial technology company that essentially operates as a digital bank. This digital-first finance company has been named one of CNBC's top fintech companies in 2023 in the entire world. And this prestigious award is presented by CNBC and Statista, which is phenomenal news for SoFi Technologies to receive this well-deserved recognition. The CEO of SoFi even commented by saying, "We are thrilled to be featured on CNBC's first list of world's top fintech companies, highlighting our continued growth and commitment to helping our members get their money right by giving them the tools to spend better, save better, invest better, and protect better." He goes on to say, "SoFi knows consumers are increasingly looking for digital-first solutions, and since receiving our bank charter last year, we have continued to improve our offerings and provide a better digital banking experience for anyone and everyone," end quote. So overall, this is phenomenal news. It acts as a very positive news catalyst. It's great publicity, and I really like how the CEO is really milking this. SoFi Technologies was specifically honored in the Neobanking category, and this should just add more fuel to the fire and increase that momentum we are seeing for SoFi stock. But like in previous videos, we are actually seeing the stock pull back slightly, because yesterday it pulled back and today it's pulling back a little bit. But I don't think these pullbacks will last forever. Eventually, it will start its upward momentum again. We just have to wait. But overall, this is a very good news update, and it adds to the positive sentiment surrounding this overall company. But that's not all. We also have to report on the analysts who have a buy rating for SoFi shares. For instance, a Mizuho analyst recently expressed a positive outlook for SoFi Technologies, ticker symbol SOFI, and he maintained a buy rating and increased his price target up to $15 from his initial price target of around $9. The Mizuho analyst is very bullish on this company, as he indicates that the company is well positioned for future growth, which is literally what I've been saying since forever. And he also says that investors should seriously consider purchasing stock in this company. However, I would add to make sure you are getting a good share price for this overall company. We've also looked at their overall financial health, and as a reminder, their debt to equity ratio is very strong, their price to book ratio is good, their DCF or discounted cash flow is very good, and their return on equity, also known as ROE, is pretty decent. The only thing that they're lacking right now is earnings. But once they become profitable at the end of the year, this is going to catapult SoFi even further upward, adding more bullish momentum. But that's not all, because we have another analyst that you probably already know about who thinks SoFi stock could surge from the current share price of around $10 up to $16, and that is a Truist analyst who slapped a buy rating on this stock, and he believes the company could surge by around 54.9% over the next 12 months. So overall, these are very good news updates for SoFi Technology, and it's not like all analysts are against this company. There are other banking analysts who are actually for the future growth of this overall company, and I 100% support that. So in a previous video, we went over all the analysts who are naysayers and critics of this company, but now I'm also telling you the bullish side or the positive side about how there are analysts who are very excited about the future potential of this company. The only thing I would say is make sure you get this company as cheap as possible. Don't just blatantly lump sum invest into this company, but rather try to dollar cost average by DCAing into the company or waiting for a substantial pullback to enter into a position. Otherwise, you're going to be forced to buy and sell shares at unadvantageous times, and it's going to hurt you over the long term. But for me, I'm a long-term investor. My average cost basis is low, and I'm just going to let this company ride for the long term while periodically taking profits right before pullbacks. But in the end, SoFi Technologies is set for phenomenal future growth. Now let's talk about another company that I like, which is Palantir Technologies, ticker symbol PLTR. And this financial reporter downgraded PLTR shares because he believes people are being too greedy. Right now, PLTR stock trades at around $18.97, while very bearish negative analysts believe the company could fall to around $5, while others believe it could surge up to $25. And in my personal opinion, the more prestigious analysts are either saying to hold the company or to buy the company, while the analysts that are on the lower end are saying to sell the company or that the company is going to fall back down to around $5, which I don't think is very realistic. As you know, Palantir Technologies is set to report their earnings on August 7th. And the company's share price has received phenomenal momentum over the past few days because the company has landed contracts and they got a huge upgrade from a Wedbush analyst, which is none other than Daniel Ives, who gave the company a $25 price target. However, they are possibly going to release their third consecutive GAAP profit, and that's what investors are looking for. However, if they don't, it is going to be catastrophic for the overall share price. From the chart, the company has gained around 211% worth of growth, and this goes back to previous videos that I've made saying that Palantir stock will surge, and a lot of people were saying that I didn't know what I was talking about or that it's not going to happen. Look at the chart. The chart isn't lying. Year to date, the company is up phenomenally. However, it does seem that people are getting a little greedy with this overall stock. Now, what I'm not saying is that the company can't go even higher after earnings, but what I am saying is eventually the company is going to pull back, and we're already starting to see that somewhat with SoFi Technologies, but for Palantir Technologies, I think the pullback is just going to come slightly later. That's why this financial reporter believes it makes sense to take some profits off of the table right now, and I completely support that decision. Why not take some profits while the company is up in their overall share price, wait patiently for a pullback, hold the majority of your overall position, and then make a decision after earnings? The author of this article, as well as myself, have advocated for either a holding opportunity or a strong buying opportunity in Palantir over the last 6 months. And the main reason for this is because of artificial intelligence and how their AI-powered analytics solutions are absolutely phenomenal for both government agencies as well as commercial clients. Analysts currently anticipate that the company is going to bring in earnings per share of 5 cents on the positive side, while GAAP earnings per share, or generally accepted accounting principles estimates, is going to be positive by around 1 cent per share, while revenue estimates are anticipated to come in close to around $534.34 million. But if we look at the overall EPS revisions over the last 90 days, we see 5 positive revisions and 1 negative revision, so it seems to indicate that this earnings report is going to be quite positive. But even despite a positive earnings report, the company's share price is unknown regarding what it's going to do. My main concern for this company is their overall valuation, which is extraordinarily high. Palantir's valuation is high relative to its own history, as well as other companies within its own segment. That's why the author of this article concludes that right now is a good time to take some profits. Now, let me tell you what he's not saying. He's not saying to sell your entire position. He's not even telling you to sell most of your position. He's saying to at least get back your initial investment from the amazing surge that we've experienced, hold the rest, and then reevaluate your strategy after earnings. And honestly, I think that is a very wise thing to do, because right now, shares of Palantir Technologies are very expensive. Right now, Palantir is trading at a PS ratio of over 16 times, and compared to their one-year average was a PS ratio, or a price-to-sales ratio, of around 8, and that's when I advocated to buy the company. I said to buy this company below a 10 PS ratio, and those of you who actually value my commentary did just just that, and you are sitting on a load of profit right now. But now let's compare Palantir to some other AI stocks, such as Splunk as well as C3.ai. C3 is also kind of expensive, trading at 13.89 for their overall forward PS ratio. And remember, these are forward PS ratios. This is not their current PS ratio. Their current one is much higher. This is their forward PS ratio, while Splunk, on the other hand, is trading at only 4. So the average between these three companies is around 8. So it seems that right now, technically, Splunk and C3.ai are much cheaper than Palantir in regards to the amount of dollars you are spending per their revenue. So it seems a cool-off is imminent for Palantir, which is trading at a higher accounting ratio regarding their PS ratio than some of the others. That's why this author is willing to take the risk to sell some prior to the earnings report. However, for me, I wouldn't base my buy or sell decision off of the earnings report because that is a very short-term view. I am a long-term investor. I take profits when the company's share price becomes disconnected from their overall fundamentals, and this saves me and it allows me to not lose money. And then I can use those profits to reinvest back into the company at a lower share price. So I would not advocate to gamble off of the short-term fluctuations regarding the upcoming earnings report, but if you want to practice proper risk management, then after the share price surges, which has been happening, taking some profits off the table is a very wise thing to do overall. However, I do think that the shares can go even higher over the short term, but if you're a long-term investor like me, these short-term fluctuations honestly don't even matter that much. But there is another thing you should know about Palantir Technologies. For instance, the majority of Palantir shares are owned by individuals. So that would be retail investors. 53% of retail investors, according to this article, make up ownership of Palantir Technologies, while institutions make up around 33%, meaning that there is a very high risk for retail investors who want to cause price fluctuations, either to get the company cheaper or to take profits. So there is major uncertainty surrounding this company's financials in the upcoming Q2 earnings report, meaning that we could have a very radical reaction from retail investors. Therefore, investors should remain cautious before investing into Palantir Technologies right now. However, like I've said, overall, the reward for the long term is absolutely amazing, and I would not speculate over short-term news or earnings reports because these can be extremely unpredictable. Lastly, let's talk about an analyst who bought this company hand over fist under $10. Essentially, he lays out this article saying that the company is going to grow over the long term and don't bet off of short-term volatility. And the reason why he thinks Palantir is going to do well over the long term is that they are moving away from government clients and more toward commercial enterprises, to where Palantir already works with most Fortune 500 companies, and they are going to profit substantially from other companies using artificial intelligence, meaning that they are going to need Palantir's overall data analytics and AI capabilities to remain competitive in this AI market. So with that being said, I would love to hear your thoughts down below about where you think Palantir's share price is headed after their upcoming earnings report. Don't forget to comment down below about SoFi Technologies, and smash the like button, subscribe if you are new, and I will see you in the next YT video.